Welcome back to Investing Talk Podcast. Today we're zooming in on Siyata Mobile. You sent us quite a bit of information, a detailed due diligence report from 2025, updates on their merger with Core Gaming, and some stock analysis too. Our goal here is really to make sense of all this for you, maybe cut through some of the noise and highlight the key insights. We've got revenue figures, details on that significant merger, and some, analyst perspectives to explore. So let's get started.
Okay, so starting with the financials, maybe looking back at 2024, Siyata Mobile posted full-year revenue of $11.6 million. That's quite an increase, 41%, from the $8.2 million in 2023.
41% growth year over year. That definitely catches the eye.
It does suggest some positive momentum in their core business for the year as a whole.
But looking closer, that Q4 2024 number, it actually dipped. $1.5 million compared to $1.9 million in Q4 2023. How does that square with the strong full-year growth? Any thoughts on that?
That's a good observation. It could be a few things, maybe seasonality, or perhaps there were some large non-recurring deals in late 2023 that inflated that specific quarter. It's also really important to remember, despite that overall revenue jump for the year, they reported a net loss of $25.3 million for 2024.
Oof, $25 million loss.
Yes. And that size of loss means, obviously a negative earnings per share. You can't calculate a price to earnings ratio when there are no earnings.
Right, no E in PE. And these sources didn't give us things like debt to equity or free cash flow directly, but that big loss certainly makes you want to check those in the full report.
Absolutely. You need the complete picture from their annual filings for those metrics.
Okay, let's shift gears a bit. This Core Gaming merger sounds potentially huge. $160 million.
It is a very significant move. They announced it expecting to close sometime in Q2 2025, and the strategy seems clear. It's a deliberate push into the mobile gaming market, which is valued at, $126 billion, a massive space.
$126 billion. That's enormous compared to their current scale. And Core Gaming itself brings something substantial to the table.
Apparently so. The report mentioned 43 million monthly active users, and they generated $80 million in revenue in 2024.
Okay, 43 million users, $80 million revenue. Those are not small numbers at all.
Not at all. And if you think about Siyata's current business, when these push-to-talk over cellular devices, the SYTA,
right, the rugged phones, vehicle units,
the first responders, enterprise clients, while they saw that revenue growth we mentioned, the scale of gaming is just completely different. This merger could potentially really transform the company profile.
So you've got the ongoing losses on one hand, but this potentially massive injection of users and revenue from gaming on the other. Yeah. What about more recent performance? We see Q1 2025 numbers.
We did, and it looks like the losses continued, at least into the start of this year. They reported a net loss of $3.79 million for Q1 2025.
Still in the red then.
Still in the red. Which raises the question, how quickly can this merger, assuming it closes smoothly, start to turn that financial tide?
And it seems the market is wrestling with that same question. The stock analysis mentioned, quite a bit of volatility.
Oh, definitely. The stock's seen some wild swings. That one day, May 9th, 2025, it surged almost 70%, jumping between $1.57 and $2, closing at $1.66.
Wow, nearly 70% in a day.
That kind of move often screams speculation, doesn't it? Especially surrounding a major event like this merger announcement.
So it feels like the market's reacting very strongly to the potential of the merger, even while the current financials are challenging.
I think that's a fair assessment. You could describe investor sentiment as maybe cautiously optimistic, hopeful about the gaming angle, but that optimism is clearly tempered by the reality of the financial losses. People are weighing the future possibility against the present risk.
Let's just briefly revisit Siyata's original business, push-to-talk over cellular. It's kind of a niche area, isn't it?
It is quite specialized. Focused on users needing really reliable instant group communication. Think first responders, field service teams, logistics. Their whole pitch is about being a modern alternative to the old land mobile radio systems, the traditional walkie-talkies, using cellular networks instead.
Got it. Okay, so we've covered the recent financials, the merger news, the stock reaction, the core business. Let's try to pull out the key takeaways. What are the main strengths you see, and what are the biggest red flags?
Well, for strengths, that 41% revenue growth in 2024, despite the Q4 dip, is notable. And of course, the strategic merger with Core Gaming is huge. It offers entry into a vast market with an established player. On the other hand, the red flags are pretty clear too. Those substantial net losses, both in 2024 and continuing into Q1 25, are a major concern. And the high stock volatility underscores the risk involved here. It's not for the faint of heart right now.
High potential, high risk.
Yep.
Makes sense. And how do they stack up against others in that original PPOC space?
They compete with companies like Sonim Technologies, Kyocera International in the rugged device, and PPOC market. Siyata's edge seems to be that specific focus on mission-critical PPOC, and now this very significant pivot into gaming via the merger. That combination is pretty unique.
Looking forward, then, what are the key things investors should really watch? What are the upcoming catalysts or potential roadblocks?
The immediate thing is the next earnings report. It's scheduled for May 27th, 2025, so quite soon. That'll give us the latest read on their financial health. Beyond that, the absolute key event is the completion of the core gaming merger, expected this quarter, Q2 2025. How that integration goes, what the combined entity looks like financially, that's critical. As for risks, regulatory changes could impact either the PPOC or the gaming sectors. And, of course, broader economic shifts could always affect things.
Okay, so summing it all up for you listening, Siyata Mobile really is a complex story right now. You've got this impressive growth in their established business, but alongside these significant, persistent losses. And then there's this potentially game-changing merger. It opens doors to a massive new market, but, it brings a lot of integration challenges and unknowns, too. The stock's volatility really reflects that uncertainty.
Absolutely. That upcoming earnings report and how the merger unfolds, those are the crucial next chapters. It really underscores why you need to look beyond just headline revenue numbers. You have to consider the full financial picture, the debt, the losses, and the strategic logic behind big moves like this merger.
We definitely encourage you to look at Siyata Mobile's official investor materials, check out those upcoming reports for yourself, and form your own informed view. What really stands out to you as the most critical piece for their future? If you found this exploration helpful, please do subscribe, like, and maybe drop a comment to let us know what other companies or topics you'd like us to tackle next time.